Retailer Target just out with some numbers. These are the numbers we've been waiting for from this big retailer. It looks like they came in with earnings on an adjusted basis of $1.53 a share. That's a penny better than the street was expecting. Revenue also beating the forecast, and a comparable store sales increase coming in at 5.3%. That's combined with both digital and same-store sales, and that beats the street's estimates of 5.1%. If you want to break that out, same-store sales were up by 2.9%. Digital sales up by 31%. It looks like they're also giving a little bit of guidance about the full year. Courtney, it looks like a full year adjusted earnings per share of $1.32 to $1.52. Street was at $1.43.
So that's for the first quarter.
And then
the full. But you're right. We also have the full year here too. So for the first quarter, it looks like that analyst consensus is about right in the middle. And then for the full year, that earnings is actually above the street's consensus there. So
575 to 605
That's
versus
right.
the 561 that the street was expecting. Courtney Reagan's here. Also Charlie O'Shea, who is lead retail analyst at Moody's. And Courtney, running through some of the numbers on these things, I think another key number to watch is going to be the operating margin. It looks like the operating margin came in at 4.9%. I had seen numbers as high as 5.4% for that expectation, but this is in line with what they reported last year for operating earnings.
It is, and then if you look
margins.
at the gross margin, I was able to talk to Target a little bit to figure out sort of what we're looking at here with the quarter when you're looking at the merchandise mix. And so initially, Target had thought that the merchandise mix they would sell more home, apparel, and accessories, which are higher margin, and they ended up playing really aggressively going after baby and toys in the absence of Babies R Us and Toys R Us, which paid off in sales, but ultimately those are actually lower margin. And so that hurt some of the gross margin area there. So when we're looking at that, the gross margin was down 40 basis points year over year, and some of that came from that merchandise mix, actually.
Charlie, the other big issue they have is obviously margins were pressured by what they're doing in terms of trying to deliver to the customer any way they want, kind of becoming more Amazonized, where you will deliver. They took away any of the charges they used to charge to show up in 2 days for delivery on those things. They can have you come pick it up in the store too.
Arms race this holiday with free shipping, and that it's not free for the retailer. It's free for us, and it's a great benefit to the shopper. But at some point in time, you're going to see that flow through the margin. We saw it this year. I think Courtney's point on toys is dead on. They doubled down hard in toys with Toys R Us gone. I was in the stores pretty much every day the last week up to Christmas, and they were reloading toys much later than they had any other year because, again, there's no Toys R Us to go to.
Much later in the season, like restocking.
Exactly. I mean, I was in the store, I think, Saturday night before Christmas, and they were reloading the toy aisles, and that's not something you're used to seeing. Toys are lower margin. You try to pick it up with other stuff, and I think that's what ended up happening this year.
Is it a bet that pays off? I mean, there were parents who were running around trying to find a place to buy toys.
Yeah.
Is it good to do that in order to get these people into your stores?
I think so. And one of the things that I've been trying to keep an eye on is what's the ripple? If I was going to go to Toys R Us to buy a plush or whatever for one of my kids 20 years ago, what else do I buy at Toys R Us? Well, I'm going to buy more toys. If I go to Target to buy that plush animal or a toy, what else can I buy at Target? It's almost limitless. Same thing with Walmart. Same thing going on the Amazon website. You're opening the door to other product sales, and that's something that historically Walmart and Target have done. They've used toys as traffic drivers, loss leaders, whatever you want, and they try to pick it up with something else.
And if I can pick up on the other point about the cost of fulfillment, we know that Target talks a lot about using those stores as nodes of fulfillment. Right. And we know that they had this incredible sort of buy online, pick up in store, drive up, ship from store service during the holidays. And for the quarter, 75% of the digital orders were fulfilled by the stores.
And that's,
so that's
much
another
way for the stores to actually, for the company to actually fulfill.
Exactly. So to your point, Becky, about the free shipping, certainly a cost. But then if you can figure out a way to use your stores, have the customer do the work, come to the store, pick it up, or get it to them when it's much closer, then the cost of that shipping is lower.
That's all the digital stuff, Court, but 2.9% comparable same-store sales growth as well. I mean, how does that stack up compared to their rivals?
I mean, that's pretty good because also the traffic was up 4.5%. I mean, that's very, very strong.
The street was only looking for 2.6%, so they beat on that.
Exactly. So the total was the total comp growth was 5.3, and to your point, Wilf, so the stores contributed 2.9% of that, and then online contributed 2.4%. So actually, the store is much stronger, which is pretty good.
Charlie, the other big question has been groceries for them.
Yes.
I think it's, if I'm not incorrect, I think it was like 22% of sales at one point, and that is a really low margin business. They seem to have gotten a better handle on some of the mix that they're doing there, but what do you just think about that strategy in general?
I think food, you look at what Walmart's been able to do with its food business, and Costco as well. Those are traffic drivers. You shop for food a heck of a lot more than you shop for anything else. Target has been public with, we don't want to be a destination grocery store. And you know, the running joke for years was you could find any kind of cereal you wanted at Target, and they've started to compress that. But I think the food business is a good traffic driver. In Target's case, they've been I've covered the company for a long time, and I've seen multiple iterations of the food business there, and now they're in another one. They're trying to reset food, get it a little more curated for the neighborhoods. If you go to the Tribeca store up the street from my office, you'll see it really tight to what the people in the neighborhood need. I think it's still evolving. I don't know that anybody ever catches Walmart with respect to food, but Target could do a little bit better, and I think they will do a little bit better over time.
What is Target? I was going to say, what is Target's results in terms of the comp and how holiday shaped up for them? How does it reflect on what the consumer was up to at the end of last year? We had this kind of abiding question as to whether there was really a slump in December.
Mike, I saw the Commerce Department numbers for December, and it was a real disconnect. We didn't really understand it. We're still trying to get our arms around it, because you look at what Amazon did, you look at what Walmart did, you look at what Costco, now Target. The big guys did really well, Best Buy. So was at the one end of the barbell, that great performance from those companies, it would take an awful lot to depress that, because you've got a bunch of smaller retailers at the other end of the scale. I think the consumer was still strong. We still have a positive outlook on the sector, which takes us through the balance of 2019, driven a lot by the big guys. But that's where retail is these days. It's a tale of the haves and have-nots, and the haves are becoming more havey, and the have-nots are getting less.
I do think that there was something to do with what we saw on the market in December and scaring off some of the high-end consumer, because Nordstrom came out and said, look, we saw a really noticeable drop-off in traffic in our stores. We still don't know why. And I think that could very well be some of it. We heard that from some of the higher-end players, or at least the players that serve a higher-end consumer, that it was very noticeable, it was very sudden, and it was otherwise unexplained.
Has there been a resurgence
in some cases? Yes, yeah. but not in all cases. But then if you look at Nordstrom again, they've got their rack business and they've got their full line business, and that rack business was very, very strong, and the full line stores was not.
Even Nordstrom online, though, you go through, and I've been shocked the last few years at the big sales that they offer on some of those products, and the prices that are not what you would have expected to be a Nordstrom price a few years ago.
Yeah, and they said they had to take some of those prices down because of what they started seeing in the quarter. And I just spoke with Eric Nordstrom about it on stage at Shop Talk on Sunday night, and I sort of asked him more than once. So you still don't know? No, we still don't really know what happened.
$20 or something.
Yeah.
Not
exactly, not what you would think.
From the normal Nordstrom, not the rack.
Yeah, for a while I thought we were getting out of that deep promotions, and we were getting back to a point where consumers were willing to pay a little bit more. I'm not sure what happened, if it was just a blip, or if they're looking for those bargains again.